Very good afternoon, investors. You're now on Kleverstock with me, Wan Izul Islam, and our midday roundup with the latest segment, new live stream from Morning Bell. We have moved over to the midday roundup, which will be happening Mondays to Friday at 12:30 p.m. Now, we'll kick it off with We apologize for that, some technical difficulties. Now, let me continue on with the Bursa Malaysia updates. So, as I was mentioning, global economic events, most notably the highly anticipated US FOMC meeting that will be happening. Now, the market barometer fell by 11.12 points or 0.69% to 1,605.40 at around 9:16 a.m. this morning, after opening slightly lower at 1,616.03. Now, among the top decliners were Malaysian Pacific Industries, which slid by 68 cents to 31 ringgit 22 cents. And then Petronas Dagangan fell by 52 cents to 18 ringgit 88 cents. Conversely, Nestle jumped by 1 ringgit 60 cents to 113 ringgit 60 cents. And Pentamaster added 8 cents to 3 ringgit 78 cents. Ace Market debutant BMS Holdings, they fell by 4 cents or 18.18% to 18 cents, making it the most actively traded stock with 39.95 million shares changing hands. Vijaya Research Sidian Berhad stated that the FBM KLCI is likely to remain guarded and trade within its consolidation range in the near term, as investors stay cautious ahead of several key global economic events. Now, the research house expects market sentiment to be guided primarily by the upcoming US Federal Reserve interest rate decision by this week, which will shape expectations on the timing and magnitude of future policy easing. Vijaya Research warned that any shift in the Fed's tone could influence regional fund flows and also drive volatility across emerging markets, including that of Bursa Malaysia. Technically, the key index continues to hover within the longer-term consolidation band, with the immediate resistance located at 1,630 points, followed by 1,638 points, while the near-term supports are pegged at the 1,600 and 1,595 levels. Meanwhile, Rakuten Trade anticipates that the FBM KLCI to continue oscillating within the 1,610 to 1,630 range today, noting that buying interest near the 1,610 level helped the index rebound from its intraday low on Friday, suggesting buyers are still willing to accumulate on dips despite the softer tone. Moving on to local currency and foreign exchange, the ringgit opened firmer against the US dollar this morning, carried by last week's positive momentum as the greenback continued to weaken ahead of the two-day Federal Open Market Committee or FOMC meeting that will be starting tomorrow. At around 8 a.m. this morning, the local currency traded at 4 ringgit 10 cents, against the greenback, improving from 4 ringgit 11 cents at the last Friday's close. Now, this positive movement comes after the ringgit hit its highest level in 4 years and 5 months last Thursday, trading at 4 ringgit 11 cents versus the greenback. Now, Bank Muamalat Malaysia Berhad Chief Economist Muhammad Afzanizam Abdul Rashid, he said that traders and investors are generally expecting a 25 basis points cut from the US Central Bank, which is projected to focus on promoting growth amid visible signs of a weaker growth outlook. On that basis, the ringgit is expected to remain well supported, with the US dollar ringgit likely to range between 4 ringgit 11 cents and 4 ringgit 12 cents. Now, at the opening, the ringgit also strengthened against major currencies. It climbed versus the British pound to 5 ringgit 46 cents. It also strengthened against the euro to 4 ringgit 77 cents and edged up vis-a-vis the Japanese yen to 2 ringgit 64 cents. The local note also traded mostly higher against ASEAN currencies. It gained versus the Singapore dollar to 3 ringgit 16 cents and was marginally higher against the Philippine peso at 6 ringgit 96 cents. It was also higher vis-a-vis the Thai baht at 12 ringgit 84 cents, though it did remain almost flat against the Indonesian rupiah at 246 ringgit 40 cents. Now, for some local economic news. Foreign investors made a modest return to the Malaysian market last week, recording 11.8 million ringgit in net buying and snapping a 2-week selling streak. That was according to CIMB Securities. Now, this reversal slightly trimmed the year-to-date outflows to 20.3 billion ringgit. Local institutional investors remain net buyers for a third straight week, raising their year-to-date net inflows to 18.3 billion ringgit, despite their weekly net inflows plunging 82.8% week-on-week to 46 million ringgit. Now, in contrast, local retail investors turned net sellers of 94.7 million ringgit, ending their 2-week buying streak and pulling their year-to-date net buy value down to 473.8 million ringgit. Meanwhile, local nominees emerged as the largest net buyers with net inflows of 93.7 million ringgit, while proprietary investors turned net sellers with 56.8 million ringgit in outflows. Between November 28th and December 4th, foreign investors concentrated their buying in the financial services with about 395 million ringgit, telecom with 50 million ringgit, and industrial sectors with 8 million ringgit. And that was led by strong buying in Maybank, CIMB, and Press Metal. However, foreign investors turned net sellers in the utilities with 370 million ringgit, technologies with 89 million ringgit, and healthcare 72 million ringgit sectors. Now, with Tenaga Nasional TNB, Sunway, and Inari Emerton among their biggest net sellers. Local institutional investors, on the other hand, were the biggest net buyers in the utilities, consumer, and healthcare sectors, with TNB, Genting Malaysia, and Sunway among their major net buys. They turned net sellers in the technology, property, and telecom sectors, with Press Metal, Maybank, and YTL Power being their top 3 biggest disposals. Retail investors also showed interest in domestic sectors, emerging as net buyers in the utilities sector with 147 million ringgit, as well as the technology sector with 78 million ringgit, with TNB, Inari Emerton, and YTL Power topping their net purchases. Still on local news updates, Malaysia's banking sector is ending 2025 on a firmer footing, charting steady loan growth, stable asset quality, and sustained profitability, despite a year clouded by global trade tensions, with the outlook for next year remaining steady amid a diversified portfolio. One of the most significant developments this year was the acquisition of Export-Import Bank of Malaysia, Exim Bank, and Small Medium Enterprise Development Bank, SME Bank, by Bank Pembangunan Malaysia Berhad in May 2025. Now, that acquisition, based on the net tangible assets of Exim Bank and SME Bank as of December 31st, 2023, positions the three banks to better expand and strengthen their mandates to bridge the country's developmental funding gap. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid, he said that the sector delivered a commendable performance despite global uncertainties stemming from US tariff shocks and geopolitical concerns. Now, the bank's return on equity, ROE, rose to 13.3% in the third quarter of 2025, higher than 12.4% in the third quarter last year. Total loan growth, which was at 5.6% in January 2025 and hit a throw at 5.1% in June, gradually improved to 5.5% in September 2025. Now, AmBank Group Chief Economist Firdaus Rosli added that asset quality remains resilient, with the gross impaired loan ratio improving to 1.41% as of September 2025, and that was down slightly from 1.43% in the previous month. Now, this improvement is supported by favorable labor market conditions, with the unemployment rate remaining steady at 3%. Now, loan trends in 2025 reflected firmer activity in the non-household segment, which grew at a faster pace of 5.5% year-on-year in September 2025, and that was up from 5% in January, primarily driven, of course, by the manufacturing sector, electricity and water, and construction. In contrast, household loans, which comprise about 60% of total loans, grew at a slower rate of 5.5% year-on-year in September 2025 versus 6% in January. However, Firdaus noted that residential, non-residential and auto segments, boosted by new car launches, were primary drivers, with credit card purchases suggesting strong consumer spending. Now, the overnight policy rate, or OPR, was reduced by Bank Negara Malaysia (BNM) from 3% to 2.75% this year, following one rate cut in July. Firdaus suggested this lower predictable interest rate path could lead to a stable net interest margin, NIM, and stimulate consumer confidence. Muhammad Afzanizam acknowledged that while an OPR cut compresses the NIM in the interim, as deposit rates only adjust upon maturity, economic growth has been stable and inflation moderate, suggesting no immediate urgency for Bank Negara Malaysia to cut the OPR again. He also noted that banks will remain vigilant on the risk of lower OPR next year. On external risks, Firdaus said that while US reciprocal tariffs may indirectly impact Malaysian banks through lower trade bills, the systemic risk remains low due to diversified portfolios. Now, investor confidence, while cautious, is not as dire as initially feared, especially as the US administration has granted numerous exemptions from the reciprocal tariffs. Up next, we're going to be heading into some corporate news developments right here in Malaysia. BMS Holdings Berhad, a Johor-based building materials distributor, made a lackluster debut on the ACE market of Bursa Malaysia today, opening below its IPO price of 22 cents per share. Now, the stock began trading at 19.5 cents, down by 2.5 cents from its IPO price. By around 10 a.m. this morning, the counter fell further, trading at 18 cents, a decline of 4 cents or 18.18%, and was among the most actively traded stocks with 82.72 million shares changing hands. Now, BMS raised about 80 million ringgit from its IPO. The proceeds are earmarked primarily for expansion. 34.28 million ringgit will be used to expand operations and facilities, 17 million ringgit to upgrade existing facilities and ICT systems, 4 million ringgit for marketing, 18.8 million ringgit for working capital, and the remaining 6 million ringgit will be used to cover listing expenses. For the first quarter ending September 30th, the group posted a net profit of 5.4 million ringgit, which translates to a PAT or profit after tax margin of 6.36%, after excluding a one-off listing expense of 210,000 ringgit. The adjusted PAT rose to 5.6 million ringgit, lifting the margin to 6.61%. Now, the group recorded revenue of 84.81 million ringgit and a gross profit of 28.62 million ringgit, translating into a gross profit margin of 33.75%. Up next, we have some more business updates. The Public Sector Home Financing Board, also known as the LPPSA, is set to make history by launching its first rated Sukuk program next year, a strategic move aimed at expanding its funding ecosystem while supporting the government's efforts in prudently managing the country's liabilities. Chief Executive Officer CEO Muhammad Farid Nawawi, he said that the proposed establishment of a Sukuk program of up to 25 billion ringgit is expected to achieve a AAA credit rating. Now, this top-tier rating is based on LPPSA's strong financial fundamentals, stable salary deduction model, and excellent financial management record since its establishment under the Finance Ministry in 2016. Now, Muhammad Farid emphasized that this initiative demonstrates that LPPSA is proactively seeking alternative mechanisms to balance its funding needs and does not rely solely on the government guarantee. He also noted that as a statutory body, LPPSA is aligning with the government's aspirations under the Fiscal Responsibility Act, FRA, to strengthen the country's fiscal position. While the government guarantee remains relevant to ensure a low cost of funds for affordable financing rates for civil servants, the establishment of this rated Sukuk program reflects LPPSA's commitment not to indirectly burden the national guarantee ceiling. Now, the CEO explained that LPPSA wanted to show investors that the agency possesses its own standalone credit quality, stressing that its assets are strong and monthly collections are very stable. He also added that achieving the AAA rating will allow LPPSA to attract the investor segment while simultaneously helping the government optimize the management of the country's contingent liabilities. Finally, we'll be wrapping it up with major corporate developments and deals across Malaysia. Headline at number 1, we've got Geohan. They've accepted 2 contracts from SRS LRT Sdn Bhd, valued at a combined 59 million ringgit for works related to the Penang Light Rail Transit or LRT Mutiara Line project. Our next headline, Hartanah has secured a 42.79 million ringgit contract from Jaya GC Sdn Bhd for the construction of immigration posts and quarters at Serikin Bau in Sarawak. Our next headline reads, Capital A expects to complete the consolidation of its aviation business to AAX and exit the Practice Notes 17 or PN 17 status by the end of this month. And number 4, the headline reads, Genting's unit, Genting Vista Berhad, has made a lodgement with the Securities Commission under the Lodge and Launch Framework for the establishment of an unrated medium-term notes or MTN program with a nominal value of 5 billion ringgit. Our next headline reads, Quality Concrete said its subsidiary QC Construction and Engineering Sdn Bhd has accepted a 294.59 million ringgit contract from the Sarawak Rural Water Supply Department for construction works for the proposed Muka water supply system. And at number 6, Gadang's wholly owned subsidiary, Crimson Villa Sdn Bhd, is selling a freehold land in Semenyih, Selangor to Transloyal Development Sdn Bhd for approximately 2.5 million ringgit cash. And that, ladies and gentlemen, is the wrap for the Midday Roundup with me, Wanizul Islam, right here on Kleverstock. Thank you so much for choosing us, investors. Stay tuned for our upcoming live stream programs. Have a wonderful week ahead and a wonderful Monday. Thank you.